Hi students, how are you? Hope you are doing good, right? Today our subject is Accounting 7707, right? This accounting, actually what is accounting? Do you have any idea? Right? Before we start our first lesson, I would like to talk about accounting. Why we need accounting? Do you think that our day-to-day life we have to use accounting? No. Actually, accounting is a business language. Then for an example, just imagine how you assess your academic performance in terms of marks. Marks can be got from the exams. Likewise, Putala, accounting is a business language, right? Accounting is a business language. We use accounting for assess the business performance of the business. How can we assess business performances, right? Normally, why do we doing a business? In order to earn profit. Definitely, if we start a business, definitely in return, we are expecting profit. How can we assess the profit? That's a problem. How can you assess the profit? Simply income minus expenses. How can we define income? How can we define expense? How can we define profit? That's a problem. This is the technique. Then that's why using accounting only, we can assess the business performance in terms of profit, right? Putha, this is a method, this is a concept, right? Do you know who is father of accounting? Who has invented this idea, right? Father of accounting is Luca Pacioli. In 1494, Luca Pacioli has written a book related to mathematics. In that mathematics book, there was a chapter called double entry theory. In that theory, or in that chapter only, that Luca Pacioli has presented his idea called double entry theory. This is the initial stage, starting point of accounting, right? Let's moving on to the lesson, right? Our first lesson, right? Lesson 1, accounting equation. Before accounting equation, first of all, I have to tell you, Putha, accounting is an idea. Since the accounting is an idea, not a reality, we have to based on number of assumptions. When we are doing accounting, we have to do number of assumptions. Then out of all those assumptions, later you will study all the assumptions, right? Before that, we have to study today most fundamental accounting concept, fundamental accounting assumption, right? The most fundamental accounting concept is business entity concept. What do you mean by business entity concept, right? Just let me explain it, right? Business entity concept, right? Okay, just imagine you are going to start a business, right? You are going to start a business. This is your business, right? This is you. I'm sorry, I know you are very handsome than this, right? This is business, this is you, right? You invest your money in the business. You invest your money in the business. Imagine you invested $1,000 to the business. You invested $1,000 to the business, right? Then you have invested $1,000 in the business, right? Then in this situation, what happened to your personal money? Your personal money, your money in your pocket decreases, right? What happened to the money in the business? Money in the business increases, right? Okay, at the same time, after some certain period of time, you withdrew money from the business. You withdrew money from the business. Imagine it is $100. You withdrew money from the business, $100. Then what happened to the business, money in the business? Cash in the business decrease. Cash in the business decrease. At the same time, what is the your personal money? Your personal money increase. Here there are two different situations, right? First thing, you invested money in the business, then what happened? Your money decreased and the business money increased. After certain time, period of time, what happened? You withdrew money from the business, then what happened? Your business money decreased and the personal money increased. Okay. Now you are doing accounting. Imagine you are doing all the accounts and all. Then here, because out of these two impacts, what do you think? Which impact should be recorded? Which impact should be recorded in the books of accounts? Books of accounts. Putha, here the most important part is this: when we are doing the account, always accounting is done for the business. Accounting is done for the business, right? In this situation, when we are doing accounting, we have to assume business as a person, business as an entity, right? Always you have to assume business as an entity. Then how all the transactions, how all these incidents affect on the business, how all these incidents affect on the business. Then what happen? When we are doing accounting, we have to consider only these impact. It means when it comes to first transaction, what happened? Because of investment of the cash increase. Because of withdrawal of cash decrease. We have to ignore the on of the business. We have to ignore the on of the business. We have to pay our full attention on only the business. Business should be treated as a separate entity. Simply, this is the idea given by business entity concept. What is it? Hope now you can understand. According to business entity concept, business should be treated as a separate entity from its owners. Then owner is totally ignored. Then we have to record only the impact of the transactions, how affect on the business. This is called business entity concept. In the tute, I have given all the notes. I will read it for you. That is, you can see, this is a very basic foundation for accounting. This concept refers that the business should be treated as a separate entity from its owners of the business. As well, this is the most important part, as well the transaction should be recorded at the business point of view rather than the owner's point of view. That's why I told you, owner should be ignored completely. We have to record all the transactions at business point of view. According to this concept, we have to consider about mainly 2 points. First thing, all the transactions should be recorded at business point of view. Other thing is, owner's personal properties. Personal properties and liabilities are not recorded in the business accounting records. Why? Owner is ignored. Hope you can understand this part. Right. Then after our basic concept, accounting entity concept, we will moving on to our main topic, that is basic accounting equation. Huda, accounting based on this equation. Accounting, mainly whole accounting system, mainly based on this basic accounting equation. It is an equation, you know. You are studying mathematics, you know what you mean by equation, right? Then basic accounting equation, under this we have to study mainly 3 items, mainly 3 key points or terminologies. First one is assets. In accounting, we have to discuss about assets. What do you mean by assets? What do you mean by assets? Excuse. What do you mean by assets? Now more clear to you, I guess. What do you mean by assets? In your life, do you have any assets? Yes, of course. Assets means, what do you think? Why you are studying? Right? You are studying, you hope, you think, you assume good education is an asset to you. Good education is an asset to you. Why you are treating education is an asset? Because of education, you can find a good job and at the end of the day, you can earn a better salary. Right? Imagine you have a big house. Is it an asset to you? Yes. Why? You can live in that house, as well as either you can rent it out and earn money. Right? If you have a business, is an asset to you? Yes. Using this business, you can earn money. Then anything, another thing, just imagine you have that smoke. If you are smoking, is it an asset to you? No. By smoking, can you earn something? Any benefit is there? No. Then smoking is not an asset. Then Pute, now you know common feature of an asset. What is the common feature of an asset? That is anything which gives gives any benefit to you, that is called asset, right? Then likewise to the business, assets are the resources. Assets are the resources which brings money to the business, which brings profit to the business, which brings return to business. Likewise, then basically what do you mean by assets? Assets are the resources. Assets are the resources which are controlled by the business. Controlled by what? Controlled by the business. Assets are the resources which are controlled by the business. Most important feature is these resources are capable enough to bring benefits to the business, bring money to business, bring a return to business, right? Then these are the assets, right? Now what are the examples for assets? What are the examples, right? Here I have given space for writing the definition, right, of an asset in your tute, right? Then write it down. What are the assets? Assets are the resources which are controlled by the business. Assets are the resources which are controlled by the business, and they are capable for bring money to business, bring benefits to the business, bring economic benefits to the business. Okay, right. Then here what are the examples? Here examples I have given: land and building, plant and machinery. What do you mean by plant and machinery? Machines and all in the business organizations, factories and all, they have to use machineries, right? Machineries, equipment, cash, then trade receivables, cash at bank, all those things. Anything which brings economic benefits, which brings money to the business are called as assets, right? Then here I have given you some features, right? What are the characteristics of assets? I told you. First thing is resources which are controlled by the business. Other thing is the resources which brings that economic benefits to the business, right? Here I have given you have future economic benefits. It means money, return, profit, whatever. Then should be controlled by the business. It means, what do you mean by controllability? Controllability means here not the ownership, then maintained with any resource which are maintained by the business, maintaining as well as they are getting the benefit, right, used by the business. Next one, should be a result of previous transaction and event. Other thing is can be measured in terms of money. Yes, of course. Everything is recorded in books of accounts in terms of money. All the things are recorded in terms of money. Therefore, all the assets should be able to measured in terms of money. All the resources should be able to measured in terms of money. Now, hope you have an idea what you mean by asset. Asset are the resources which are controlled by the business, right? Then after that, these assets mainly can be divided into two, right? These assets mainly can be divided into two. How? These assets mainly can be divided into two. First one is non-current assets. Non-current assets. Other one is current assets. Non-current assets and current assets, right? Non-current assets and current assets. Keep one thing in your mind. In accounting, right? In accounting, this is a common definition. If something says non-current, it means more than 1 year. It means more than 1 year, right? If something says current means less than 1 year. Less than 1 year. It means within 12 months. Here more than 12 months, right? Now tell me, what are the assets which can be used in more than 1 year? What are the assets, what are the resources which can be used in less than 1 year, right? This is the classification of assets. This is a classification of assets, non-current assets and current assets. Non-current assets mean the assets which can be used in more than 1 year. Current assets means assets which can be used in less than 1 year, right? Here I have given in the tute, I have given you the flow chart as well as with these current non-current assets again can be divided into two. Right? These non-current assets again can be divided into two based on the tangibility. What do you mean by tangibility? Tangibility in the sense, what are the assets can be touched? What are the assets can be seen, right? Then what are the examples? You can give me some examples, right? Here that non-current assets divided into two as tangible assets and intangible assets. Tangible assets and intangible assets. Tangible assets means non-current assets which can be touched. Intangible means non-current assets which cannot be touched. Right? What are the examples? Yeah, yes, I know you can give me number of examples under tangible non-current assets. Land, building, motor vehicle, computer, fixtures and fittings, that furniture, all those things can be touched. Then all those things can be used in more than 1 year, right? Then as well as can be touched. But what are the intangible non-current assets? With the intangible non-current asset, one thing is deposits. If you deposit money for more than 1 year, can you touch the deposit? No. You can't touch the deposit, but only the passbook or certificate or whatever the thing. Investments, if you invest money in another company, buying shares, all those things, investment, fixed deposits, as well as another most important thing is goodwill. What do you mean by goodwill? Any idea? We will discuss these terms in later in detail. Simply, goodwill means with our reputation. Yeah. Because of then, do you think that if you have good reputation, because of your reputation, you can earn money? Shall I give an example? Adidas, then Coca-Cola, right? Pizza Hut, McDonald's, KFC. Because of this name, more customers attract to that product. Right? Then that's the thing that is called goodwill. Because of goodwill, goodwill is capable for generating profit or money to the business, right? Hope you can understand. I explain you what is the definition of an asset. What is an asset? The resources which are controlled by the business and brings economic benefits to the business. Then I gave you some features also. Then other main thing is assets can be divided into two as non-current assets and current assets. Non-current assets in the sense, the assets can be used in more than 1 year. Current means less than 1 year. Then again, non-current assets can be divided into tangible and intangible. Right? Here, non-current assets, these assets have been bought with the intention of use in the business. Very important. You can underline it, you can highlight it. Put these non-current assets, there is no any resale intention. They have been used for use in the business. Right? Land, building, motor vehicle, all those things, businesses purchase those things for use in the business. Right? As well as not for resale. Then here I have given you the space for writing the features. You can write it down. First one. First feature is can be used in more than 1 year. Can be used in more than 1 year. Second one, right, have been bought for use in the business. Have been bought for use in the business. Right, those two are enough. Right, next one is current assets. What do you mean by current assets? I told you, current assets are the assets which can be realized within next 12 months. It means which can be sold within 12 months, which can be converted into money within next year. Right? Examples, inventory means goods. Goods which are available for resale. Right? Imagine supermarket, all the goods and goods are available for resale. Then as well as you imagine Toyota car sale. If it is a car sale, cars are available for resale, right? Then another thing, you imagine that garment factory or something, right? Garment factory or something, shopping complex, all the things are available for resale. Then those things are called as inventory, right? Trade receivables, who are the trade receivables? Trade receivables, Imagine you are the business. Imagine you are the business when you sold goods, when you are selling goods to the customers, not for cash but on credit. They should pay us, they owe us, then those customers are called as trade receivables. Then cash at bank, deposits, and cash in hand. Here also you have to write the features, right? First feature is what is that these assets can be converted into cash within next 12 months. First feature is can be converted into cash within next 12 months, right? Right. They are included in the working capital. This working capital thing I will explain in later in detail. Right. Here I have given you an exercise. In the tute, I have given you an exercise. What is it? Right. It says classify the following assets based on the liquidity. What do you mean by liquidity? Liquidity means how long it takes to convert into money. Liquidity means how long it takes to convert into money. Then it means normally assets divide into two, current and non-current. Assets divide into two, current and non-current, based on the liquidity. Liquidity means ability of an asset to convert it into cash. I told you current assets, inventory, trade receivable, cash at bank, cash in hand, all those things can be converted into cash very easily within less than 1 year. But imagine Buddha, then land, motor vehicle, buildings, equipments, and all those things. Can we convert them into cash very easily? No, it takes time. That's what. Then now here there is a list of the items, right? Then you have to classify them as current assets and non-current assets, right? Then I'll give you only 5 minutes. Within that 5 minutes you have to do. Hope you did the exercise, right? You must, right? First one, inventory. For the inventory, how long it takes to convert into cash? More than 1 year or less than 1 year? Inventory, goods available for resale, right? Definitely less than 1 year, then it is current assets. Next one, land. Imagine you want to sell a land. Immediately can you sell it? No. Then it is a non-current assets. Investments. I told you investment is what is it? Investment is a non-current asset but intangible non-current asset. It also a non-current asset. Cash in hand, already it is cash. It is a current asset. Motor vehicle, non-current asset. Motor vehicle, non-current assets. Trade receivables. What do you mean by trade receivable? Who owes money to business? Money to business? Then immediately they have to pay us within less than 1 year. Therefore, it's a current asset. Next on cash at bank. It means current accounts and all. Those things also current asset, right? Hope you can understand what you mean by assets and the classification of assets. This is the first terminology under a basic accounting equation. Let's moving on to our next terminology, that is, what is it? Any idea? Do you have any idea? Yes or no? Right. Okay, the next terminology is liabilities. What do you mean by liability? Any idea? I know you don't know the accounting meaning of those, but still you can get a general common idea of liabilities. Liabilities. What do you mean by liabilities? What do you mean by liabilities? Just general idea. Puta, liability is what is that? It is an obligation. Owing something. Payable, isn't it? Responsibility. Liability is an obligation, right? In accounting terms, it says, right? Liability is a financial obligation, financial payable. Right? Owings. Business owes to somebody. Right? Business is payable to somebody. It's a financial obligation. Right? Now write down the definition of liabilities. What do you mean by liabilities? Liabilities are the financial obligations of the business. Right? Then now assets are the resources of the business. Liabilities are the financial obligations of the business, right? Okay, financial obligations, payables, right? But they here liabilities also again can be divided into two, right? Liabilities also can be divided into two, same as assets. What are those? Any idea? Yes, non-current liabilities, and current liabilities. Non-current liabilities and current liabilities. Same as earlier, non-current means what? More than 1 year. More than 1 year. Current means what? Less than 1 year. Then what are the obligations? What are the liabilities should be settled? What are the liabilities can be settled in more than 1 year? Those things are called as non-current liabilities, right? What are the liabilities? What are the obligations, payables should be settled within 1 year? Within 1 year, these things are called as current liabilities. What are the examples? Here, imagine bank loan. Normally, bank loan is for more than 1 year. Some bank loans are there, maybe 50 years, 30 years. The bank loan, mortgage loans, all those things are more than 1 year. But imagine if you buy goods on credit from the suppliers. You are running a business. Imagine you are running a supermarket. Then you are buying ice cream from a particular brand. I can't tell you the brands, right? Particular brand on credit. You are not paying money, but you are buying goods, right? That payable amount, that obligation should be settled in less than 1 year, right? Less than 1 year, then those liabilities are called as current liabilities. Then that thing also given in the tute. What is that? Liabilities can be categorized as follows. First one, current liabilities. What do you mean by current liabilities? These are the liabilities should be settled within next 12 months or on demand. On demand means whenever they require, when they ask money, we have to pay. We have the obligation, right? Then what are the examples? Bank overdraft. What do you mean by bank overdraft? Put a bank overdraft in the sense we can deposit money, right? We can deposit money if we want to withdraw more than deposited amount, right? Imagine we in the bank account we have only 5,000. Right? In the bank account, we have only 5,000. But if we want to withdraw 7,500, we have to withdraw 7,500. Is it possible? We have deposited only 5,000, but we have to withdraw 7,500. What do you think? Is it possible or not? Yes, of course, it's possible. If you are a good client to the bank, if you are a good customer, good client, bank manager will allow you to withdraw this amount. But after withdrawing this 7,500, you owe to bank how much? You owe to the bank 2,500. You should pay. This 2,500 is called as bank overdraft. This 2,500 is called as bank overdraft. This 2,500 is called as bank overdraft. This one should be normally this amount should be settled within 1 month, like, right? Within one year you have to settle this. This is a bank overdraft. Other thing is trade payables. What do you mean by trade payables? You are buying goods from your suppliers on credit. These are the current liabilities, right? Then non-current liabilities. What do you mean by non-current liabilities? Then here these are the liabilities can take more than 1 year period to be paid. There will be more than 1 year of period, or it will take sometimes 2 years to 25 years, 30 years, 50 years. It can be anyway more than 1 year. For an example, bank loan, mortgage loan and all. Again, here there is an exercise, right? There is an exercise. What is that? I have given you list of liabilities. You have to classify them as non-current or current based on what? How long it takes to repay the settle the obligation, right? Now time starts. I'll give you only 5 minutes. Okay, did you do? Have to do, right? First one, Debentures. What do you mean by debenture? I think you have studied this one under business studies. Yes or no? Yes. But the debentures used by the companies. Company needs to, when company wants to borrow money from the general public borrowing money using these debentures, right? It means they are taking long-term loan from the general public to the company using these debentures. Therefore, it's a non-current liability. Next one, trade payables. I told you, you are buying goods from the suppliers. It should be settled within, it means less than 1 year. It is current liability, right? Next one, bank loans. Long-term liability, because bank loan can be settled in more than 1 year. Bank overdraft, I explained it. This is bank overdraft. Then I told you it should be settled in less than 1 year. Next one, accrued expenses. Most important thing. What do you mean by accrued expenses? Accrued expense, imagine like this. This month, last month telephone bill not yet paid. Last month telephone bill not yet paid. Already last month telephone bill means you have used telephone facility, but the payment not yet had been payment is not yet done. Then what is it? It is payable. Accrued expense means expenses payable. You have used the facility but not yet paid the monthly payment, right? Then it also should be settled in more than 1 year, less than 1 year. Definitely in less than 1 year. In immediately you will have to pay, otherwise then utility service provider will stop providing the service if you are not settling the bill. Then it should be settled as early as possible. Therefore, it is current liabilities. Next one, mortgage. Mortgage loan is also a non-current liabilities. Okay. Simply, what do you mean by liabilities? They are financial obligations. Payables, right? Next, moving on to our next part, our last, according to this basic accounting equation, our last terminology, that is equity. Okay, next moving on to our third third terminology, that is equity. Any idea what do you mean by equity? It will be different term, right? Not common, equity, yes. But equity always talks about owner's ownership. That earlier I told you that when it comes to business entity concept, business is a separate party, owner is a separate party, right? When owner gives something, owner's ownership of the business is equity. Owner's ownership, then imagine you started a business, right? Then you have to assume, okay, you are the business, then you are owner. Owner's ownership of the business is called as equity. Owner's ownership of the business is called as equity. So this equity can be calculated in this way. Equity equals capital plus profit. Equity equals capital plus profit. What do you mean by capital? Profit, you know, right? After owner starts a business, what is the return they are getting is profit, right? What do you mean by capital? This is very important. What do you mean by capital? Puta, capital is the resources which are invested by the owner, right? Capital is the resources which are invested by whom? Invested by the owner or owners. Owner or owners, right? Resources which are invested by the owners, right? It can be cash, it can be building, it can be motor vehicle, fixtures, fitting, whatever the thing. Now you know resources, assets, right? Then resources which are invested by the owner is called as capital, right? Then the capital plus profit equals equity. Shall I explain you it in detail, in a different way, right? Imagine you are the business, right? You are the business. Owner invested 1,000. right? First situation, owner invested 1,000. Owner invested $1,000. Then Puta, what is it? Invested. Owner invested in the sense it is capital, right? Here how to find the equity? Equity equals capital plus profit. Then owner invested means the 1,000 represent capital. Then profit is 0. Then here equity equals 1,000. Equity equals 1,000. Second one, business earned 500 profit. Business earned 500 profit. Then what happened? Business earned $500 of profit. Then Pute, what happened? Here equity, earlier your invested capital is 1,000. Now business has earned a profit also. The earned profit is given to whom? Business gives this profit to the owner. Then what happened? Profit increased by 500. Earlier equity equals 1,000. Now equity ownership equals how much? It is 1,500. Now can you understand the difference between, can you understand the word of equity? Equity means owner's ownership. Owner's ownership equals capital plus profit, right? Capital means the resources which are invested by the owner. Then here when owner invests money only, equity equals capital. When owner has business has earned profit, then equity equals capital plus profit. Hope you can understand. Okay, now we studied. I explained you what do you mean by asset, what do you mean by liabilities, as well as what do you mean by equity. Now we are going to study about basic accounting equation. What is the relationship among these items, all these three items? What is the relationship between the relationship among these three items? Okay, here I am writing here assets, equity and liabilities. Right. Putha, what do you mean by basic accounting equation? It means like this. Basic accounting equation, it is assets equal equity plus liabilities. Assets equal equity plus liabilities. This is the basic accounting equation. Any idea? No. Okay. Let me to explain it. Imagine, right? Today in the morning you got money. Right, you got how much? 500 from your mother. You got 500 from your mother, right? As well as you got another 100 from your friend. Right, you got 500 from your mother and you got another 100 from your friend. Now all together how much do you have? All together how much do you have? Now all together you have 600. Am I correct? Yes. All together you have 600. This 600 is what to you? It is an asset. Why? You can do whatever you want with this 600. You have money. If you want, you can eat, drink, get something, whatever the thing you can do. You can get some economic benefit. Right, therefore this cash, right, this 600 is an asset to you, right? Out of these these 500 and 100, how much is an obligation? How much then? What do you think? The amount you have got from the mother, your mother, do you have to repay? What do you think? Do you have to repay it? No. Why? She is your owner. She is your owner. Therefore, you don't want to you don't want to repay it. You got something from your owner. Owner's ownership. What does it mean? What does it mean? It is the equity. Am I correct? I told you. Owner's ownership, then equity. You got from your owner. Mother is your owner. Therefore, you got from your mother 500. You got from your friend also. Right? If he or she is not a close friend, what you have to do? You have to repay it. Am I correct? Yes. Since she or he is not your owner, you will have to repay it. Repayment, what is it? Obligation. Right? Obligation, what is it? It is liability. It is liability. Now you can see the relationship among assets, equity and liabilities. Right? Then resources, the business, what business has the resources, total resources is called as assets. These assets are contributed by two parties. Who are the parties? First one owner, other one is third party. Right? Owner's contribution is called as equity, third party's contribution is called as liabilities. Why? You will have to repay it. This is the basic accounting equation. Can you understand? Hope you can understand. Right? Then here the relationship between the assets and the ownership of the assets is represented by basic accounting equation. Again I am repeating. The relationship between the assets and the ownership of those assets. One part is owned by the owner, another party's portion is owned by the third party. Right? The assets and the ownership of these assets are called as, the relationship is represented by basic accounting equation. Right? Then here you can see the relationship among the assets, equity and liabilities. According to the accounting entity concept, it is assumed that business have separate existence from the owner. Therefore, right. Then here in the tute, I have given you some examples. Right. Let me to explain it. Right. Let me to explain it. Here, look at the first one. First situation, there are different situations. Right. First one is, here look at, when the example number 1, John started a business by investing 100,000. John started a business by investing 100,000. Then who is John? John is the owner. Owner started business by investing 100,000. 100,000, what is it? 100,000 is cash. This cash amount is an asset to business. Then what happened? Cash increased by 100,000. Right? This 100,000, business got this 100,000. Now always you have to assume you are the business. John is a separate party. You got money, you are the business. You got money from John. Then what happened? Your cash increased. At the same time you got it from your owner. Owner means equity. Equity increased by 100,000. Equity increased by 100,000. Here, did you get anything from the outsiders? Third party? No, zero. Right? No, zero. Then what happened in this situation? Business got only resources from the owner. Therefore, here total assets 100,000 equals equity 100,000. Here in this situation, assets equal equity. Why? The total resources were contributed by the owner. Right? This is the first situation. Right? Look at the second one. Look at the second one. John invested his personal van in the business. Or John invested personal van in the business. Then what happened? Earlier he invested 100,000. Now he has invested van. Motor vehicle. Motor vehicle in the business. Then what happened? What is the asset you got? You are the business. You got a van. Right? You got a van. Right? Van is an asset where you can use the van for generating profit. Then what happened? Here van, it is an asset increased by 500,000. Right? 500,000. This van, that owner got this, business got this van from the owner. Owner means always equity. Then equity increased by 500,000. Equity increased by 500,000, right? Here what happened at the anyway, that's why I told you, when it comes to capital, right, when it comes to capital, it can be cash, it can be cash, it can be assets. Whatever the resource we got from the owner, it is called as equity. When the business gets only from the resources from the owner, the equity here assets equal equity. Okay, now when the owner invests money in the business, what happened? Assets equal equity. Look at the second one. Second example, the business has been started by obtaining a bank loan. Bank loan. Business has been started by obtaining a bank loan. Then Pute, what happened? Whatever the bank loan or something, you are the business, you are getting money. How much you have got? You have got cash 50,000. You have got cash 50,000. From whom you got this 50,000? Bank loan. Bank is your owner? No. If you obtain a bank loan, Pute, you have to repay it, right? If you obtain bank loan, the bank loan should be repaid, right? Bank loan should be repaid means what is it? Financial obligation, right? What is it? It is financial obligation here. Financial obligation, what is it? As bank loan, here liabilities increase, bank loan. Then did you get anything from the owner in this situation? In this situation, you did not get from anything from the owner, right? You didn't get anything from the owner. Then what happened? In this situation, total assets were contributed by only liabilities. Total assets were contributed by only liabilities. Here 50,000 equals 50,000. In this situation, assets equal what? Assets equal liabilities. What did I say? I told you always basic accounting equation represent the relationship between the assets and the ownership of the assets. Assets and the ownership of the assets. Earlier time, total of assets were owned by the owners. In this situation, total assets are owned by the third party. Look at the third one. Right. Now, third one I told you here. John started a business by investing his own money 200,000 and obtaining a bank loan of 50,000. Right, you are the business. How much you got? You got 200,000 from the owner. Right, from John you got 200,000. Owner means always equity. Equity how much? It is 200,000. You got 200,000 from the owner, means John. As well as you have got another 50,000 from the bank loan. What do you mean by bank loan? Bank loan is a financial obligation, right? What is it? This 50,000 should be repaid, right? This 50,000 should be repaid. Then you got 200,000 from the owner, you got 50,000 from the third party bank loan. Then all together how much you have? Who are you? You are the business. According to business entity concept, always you have to assume you are the business, right? You got resources from two sources, right? Owner and the third party. At the end of the day, all together you have 250,000. In this situation, total assets 250,000, then contribution here 250,000. Then in this situation, assets equal equity plus liabilities. Why? Total assets 250,000 owned by 200,000 owners and 50,000 bank loan. Now I guess you can understand very well what you mean by basic accounting equation, assets and the ownership of all these assets, right? Here now you can see the question number 1. I have given you the table. In that table, assets, equity and liabilities, some missing figures are there. Now you have to do it, right? Okay. Okay, right. Then hope you did the question number 1, right? Then we will discuss it as well as Putala, you have to do question number 2 to question number 8, right? Here I have given you lots of quick exercises. You have to do question number 1 to question number 8. Then I will discuss it when it comes to activity session. Okay.